Hey guys, good afternoon. Good afternoon. I don't know. Let's see if all of this is working. Let me see if Instagram is lagged. It's like a few seconds behind. This is not going to be good, guys. Okay. All right. I think I like when Instagram is real time. So this multicasting thing may not um, work too well for me. Okay. And then what I can't even see y'all comments on Instagram on this platform. Okay, guys, so I'm testing out. Well, first of all, I'm going to be talking about the 2024 updates. But before we get into that, I wanted to test out the software really quick to see how things stream between Facebook, YouTube, and Instagram. So I have it. Instagram finally gave me permission to stream to simulcast on their platform, but it seemed like it's you guys are like really behind me. Um, and that's going to be a challenge if you guys have questions and things like that. So I'm excited, but this leg is, I don't know. Chan, how's the leg? Because on Facebook, I'm at, yeah, I'm totally two different times, but we're going to rock this thing on out, okay? We're going to rock this thing on out. Is no leg? All right, put one in the chat, guys. Let me know so I can see if there's a leg. Put one in the chat for me on Instagram. Put one in the chat for me on Instagram. Put one in the chat. It is a leg. Okay, so the one just came up. One just came. Okay, Chang, your one just came up. Okay, so it's not too bad. All right, so let's rock this thing on out. All right, guys, good afternoon. Good afternoon. I'm your girl, Folasade, the accountability accountant, guys. Happy Monday. I haven't seen you guys since last week, since we talked about the possible changes to this upcoming tax year. So, guys, I hope that you took some notes from our last live stream, so you won't be rushing to file your taxes, and guess what, they end up making changes. So guys, if you missed out on last week's live stream to figure out the new laws that will possibly be implemented this upcoming tax year, head over to our YouTube channel, which is Folasade TV. Head over there and watch our YouTube channel, which is Folasade TV, guys, so you can catch last week's replay about the child tax credit changes and things like that. Let me see if I can put it at the bottom. Oh, it's pretty small. Nope. All right, well, let me move on. Okay, so head over to our YouTube channel, which is Folasade TV, guys, so you can catch last week's live stream. So on today's live stream, we're going to talk about the 2024 tax updates, what you guys need to know going into this year, what you need to be tracking, what do you need to be doing. So when you go to file your tax return next year, you would have one, maximize your tax deductions and did it right, okay? But you will also be prepared to take all the deductions and things that are applicable to you and your family. So remember, guys, if you're new to me, you may not know this, but if you've been watching me for quite some time, you now understand that everybody's tax situation is unique in itself. Your tax return will never be the same as mine if we don't make the same amount of money, have the same amount of children, live in the same state, had the same investments. So everybody tax return is significantly different. This is why I always say that going off such and such refund and going off XYZ refund is not a good look for you guys, because you don't really know that person's income. They probably told you they made $50,000, girl, but they only make 40,000. They probably told you they claiming all two of their children, but they only claiming one of them. Like, we really don't know a person's situation until you actually see their tax return. And if their numbers are not 100% line by line with yours, y'all refunds, the amount you owe, and y'all tax situations will always be significantly different, okay? So let's rock this thing on out. So I wish I did have something to share my screen with, but I may. Let me see. Let me see. Okay, let me close out this, see if I can close out these tabs on the side. All right. Okay, guys, so I'm going to share my screen really quick so we can go over some of the changes for the upcoming 2024 tax year. So why am I doing this? The reason why I'm doing this is so you guys can prepare to do things the right way this year, maximize your taxes this year, and track everything that you should be tracking, okay? So the first thing that you guys need to be concerned with is your standard deduction, okay? So your standard deduction is the number that the IRS, Congress give each and every one of us depending on our filing status. So you probably heard married filing joint, you probably heard married filing separate, single, head of household, all of those things, guys. Those are your filing status, okay? And depending on your filing status determines, I'm trying to get it to the point. Okay, yeah. Depending on your filing status determines the amount that you will start paying taxes on the money that you make. So if you are single, right, you can make $14,600 before you owe federal taxes, okay? Because they're going to give you that as a standard deduction. They take that away. So also, if you hire your child, right, and your child legally works for your company, you can also pay them up to $14,600 for this 2024 year before they have to pay federal taxes. Okay. If you're married filing joint or qualifying survivor, then the total amount is $29,200. So that means you and your hubby or you and your wife can make up the $29,000, $29,200 before you guys pay any federal taxes. That number is really important. So if you guys make $14,600 less in 2024, you didn't even owe federal taxes. This is why I said tax planning always benefit everyone regardless of your income. So if you only make $14,600, you shouldn't have paid any federal taxes. If you and your husband only made $29,200, you don't have to pay federal taxes. Now you guys will always have to pay Social Security and Medicare taxes. But when it comes down to your federal tax obligation, that's where that 10% tax bracket begins to start being taxed on your income. Okay. Alrighty, so remember, if you hired your child, you can pay them up to $14,600. If you make $14,600 or less, you shouldn't be paying any federal taxes. That's your standard deduction. That is the amount that the IRS give each and every one of us, okay? So the next thing that I wanted you guys to pay attention to as well for my business owners, give me one second. If you are a business owner, you definitely need to be tracking your business miles, okay? And you need to be tracking your total miles. So let's say, for example, you own a vehicle, but it's not 100% used by your business. So sorry, guys, give me one second. I'm trying to learn how to share and stop sharing at the same time while I'm talking and all of that stuff. So you see me, trying to move things around. Let me see. Okay. That's it. I think I got it. Okay, I got it. All right, I figured it out, y'all. Okay. So let's say, for example, you have a business and you use your personal vehicle. Let's say you own a Mercedes, right? You use your personal Mercedes to do deliveries or to meet clients and things like that. But that same Mercedes is also used for your personal, right? So that means you do not use that vehicle 100%. So in that case, and now, due to the new tax court laws that were the tax court cases that were lost by someone like yourself, now you have to track all of your miles. So what I mean by all your miles, you need to track your personal miles, your business miles, and your commuting miles. So every time you get in that vehicle that's used for your business as well, you need to track all of the miles, even if it's personal, so we can calculate your business use. Okay. Due to the recent tax court changes, the IRS said, oh no, we're not accepting them little end of the year odometer readings. We're not accepting, that thrown together mileage log. We want contemporaneous. That means records maintained throughout the certain time frame of your mileage or your expense. So every month you should be tracking it. Every trip you should be tracking it. Okay. So the IRS said they don't want those bogus mileage logs no more. They want you to track it all. So guys, I recommend you guys either use your QuickBooks mileage or you use a software like Mile IQ. Anna said, giving the people more work to do. Yes, girl. So, this all comes from people taking advantage. Since I've been representing clients, I can understand why the IRS is now implementing more policies and regulations with that, because people would just claim an enormous amount of miles, guys. I've seen the most craziest things. 25,000 miles and they not a delivery driver. 50,000 miles. And this has been going on for 10 and 15 and 20 some odd years. So we tend to mess things up. And that's what we did. We messed it up, guys. So we can't necessarily blame it on the IRS. We actually have to take some form of responsibility as well. Now, the IRS said you can track it now. You can take the expense as long as you track it. So at least they didn't take the expense like they did from the employee side. Remember, from the employee side, they can't even deduct their mileage any longer due to all of the fraud. So they're allowing us from the business side to still do it, guys. So we have to kind of, take the grain with we kind of got ourselves into this, guys. Okay. All righty. So if you, okay, now we got an issue. How do I get this back to full screen? Okay. All right. Well, we're going to have to make that work. If you drive your vehicle for business purposes, you get to take 67 cents on the mile. Guys, I love that. They said for every mile you drive for your business, you get 67 cents. So pull out your calculator, right? Give me 1 second. Let's say your miles was $2,000 for the year, 2,000 miles for the year. Take that 2,000 miles, multiply that by 67 cents. That's $1,340 in tax write-offs. So I would invest in having QuickBooks track my miles or having a software like Mile IQ. And guys, if you want, check out my affiliate link in my YouTube, in my link tree on my Instagram, and go to Folasade Affiliates, and my Mile IQ affiliate will be there for you guys to grab it. I think you also get a 20% off per month as well. So the next mileage that a lot of you guys probably were not aware of was that you guys actually get to deduct some of your medical mileage. So let's say, for example, you driving to your doctor's appointment. This is why it's important that you guys track this stuff too. You driving to your doctor's appointment. Guess what? You can take those mileage as a tax write-off. They actually giving you guys, what is it? I think it's 21 cents per medical mile. And so let's say if your mom is your dependent and you drive your mom, you can also take the medical mileage deduction for her as well, for you taking your mom and your dad and your children to their doctor's appointments and things like that. And then last but not least, regarding the mileage, is your charitable mileage. A lot of you volunteer with Boy Scouts, Boys and Girls Clubs, doing all sorts of things. You guys are amazing. And guess what? If you track your charitable miles, you get to take 14 cents on the mile. So if you are volunteering, having medical trips to the doctors or to the hospital or to appointments, or you're a business owner, you're able to deduct a portion of your mileage. And the reason why I like that is because it's giving you money back for utilizing your own vehicle. You're not even spending money to make that money. That's money that's given back in your pocket when you go file your tax return. This is why I recommend you guys to track your miles, because it's not a free deduction, but it's one that don't cost you to spend money. And see, this is why it's very important, guys, that you do tax planning and speak with an accountant, because a lot of you guys are spending money to get tax write-offs, whereas where it's write-offs like mileage, where you don't have to spend money to get a write-off. You just have to do business, and then you get the write-off, okay? So we talked about the mileage rate. So guys, before I begin, do you guys understand everything that I just put down for the mileage rate? Put 1 in the chat if you guys understand. And guys, if you are enjoying this on Instagram, you're finally able to see my screen, please share the video. If you guys are enjoying this on Facebook or YouTube, please share the video with somebody, some other business owner, somebody that want to pay little to no taxes. You guys always say you want to take all of the maximum write-offs. Take this time and share this video up with that person that want to do it, because I teach you guys how to do it the right way, not taking shortcuts and just spending money unnecessarily. So please let me know before I go to the next thing if you guys understand what I was referring to regarding the mileage deduction for the business, for medical, and for charity. Let me know. Put 1 in the chat. Okay. Okay, guys. So I didn't see no ones, but I'm gonna keep on going. What was that? Okay, guys. So the next thing we're going to talk about is your retirement accounts. Okay, a lot of you guys have 401ks, 403bs, TSPs, and all of those things, but you're not either contributing to it, you're not taking advantage of it. And so, guys, we're going into 2024. If you're an 80s baby like me, we're getting old, okay? I'll be 39 this year. And so this is the time for you guys to really start to get disciplined and start contributing to your retirement account. And one of the main reasons is because, one, you're going to look up and need that money to retire with. But then in addition to that, you also get tax write-offs for contributing to your retirement accounts. So for example, if you have a 401k or 403b, you're able to contribute up to $23,000 into your 401k plan. If you're over the age of 50, because they're giving you more opportunity to catch up, they're allowing you to contribute up to $30,500 for 2024. This is a large amount, guys. One time I can remember when we were at 16,500. Due to the inflation, we're all the way up to 23,000. So what does that mean? This means that you can contribute up to $23,000 into your retirement account if you're under the age of 50. Now, the beautiful part of your 401k is that the money that you guys contribute into your 401k, guys, is not taxed. It's pre-tax. So you will get the pre-tax benefits, meaning you have money being socked away that the IRS haven't taxed yet. Okay? Now, if you have a Roth or any other individual retirement account, your contribution limits at $7,000. But it's post-tax, meaning it's the money that you contributed after you got paid, after your taxes was withheld. And depending on your income and all of those things, you may not even be able to contribute to a Roth and things like that. There's just so much going on with those Roths. That's why if you have a Roth and you have a 401k or 403b, you have multiple plans going on, make sure you have a financial advisor, guys, so they can make sure that you're contributing the max to the most beneficial account per year. Okay. All right. So let me stop sharing really quick. So if you guys have children, Okay. And you are making investments on behalf of your children. They may have a stock portfolio. They may have some crypto. They may have some dividends account somewhere, right? They're able to get entrance up to $1,300 before you have to pay taxes on that money. Now, they may not have to file a tax return if it's not above the standard deduction, but any entrance above $1,300 is tax free. Once it goes above 1,300, you guys have to add it to your tax return and pay taxes on it. So what does that mean? That means your children can get dividends from Coca-Cola, Disney, all of them companies, and tax free up to $1,300. Okay. So guys, do you have any questions so far? Put your questions in the chat. Put your questions in the chat. Okay. All right, so I have some good ones for you guys, and I know you probably have not heard this yet, so you guys are going to hear it first. All right. Do you guys know? That's why I say it's a lot happening this tax season. There's so many changes happening. It's so much going on. I don't know, a little tax geek like myself. I'm happy. Let me see. Hold on, guys. I think I got to take a quick pause. Let me go get my charger, guys. Just give me 1 second. Let me take a quick little break. Let me go and grab my computer charger because it's literally about to die. But I want you guys to hold out because I have two did you knows because you guys probably didn't know. So you will hear it first here. So let me go and grab my charger. Give me 1 second. I'm looking for the right video for my break. All right, so hold on, guys. Just give me a second. All right, guys, I'm back. Sorry about that. I had to go grab my computer charger before it dies, guys. Okay, give me 1 second. Oh my goodness, guys. So this tax write-off with tax strategy is key. And I'm actually happy that they implemented this. Because number one, Black people have a lot of student loan debt. So, we will greatly benefit from that one. Did you know? And then the second, did you know we will actually benefit because, times are getting tough. So for them to implement these two things, I know it may not be as huge of a numbers when I say the actual numbers, but it can really help somebody in the long run. Well, a lot of people in the long run. Okay, give me 1 second. Okay, alrighty. So first things first, guys. Did you know that in 2024 you are now able to get? So let's say, for example. Okay, let me give you guys context so you can understand it. So, every job have their matching for their retirement accounts, the 401ks and the 403bs and things like that. They match you guys, right? A certain amount. And every job's program is different. Okay. However, now what they're saying is that your company is now able to match your student loan payments into your retirement account. So let's say, for example, you pay $5,000 into your student loan for student loan payments. Your job is now able to match that $5,000 into your retirement account. So yes, you didn't contribute into your retirement account, but you paid your student loan, but your job can now take your student loan payment as a matching principle to match and put money into your retirement account. Now tell me that's not bomb, guys. So that means you're able to achieve two goals. You're paying down your student loan and you're still contributing to your retirement account. Like, I think that was like so cool. What you guys think? Put one in the chat if you think that that's lit. Put one in the chat if you think that's lit. Yes, it is amazing. Guys, I'm like so excited because I've always been like my clients always ask me, Folasade, what's your principles of building wealth? I do like, I don't know what it's called. I'm gonna come up with my own little process eventually, but I have like a 50-50 thing. Like, I still want you guys to invest and pay down debt and save. Like, we have to do all three, but I want us to do it in such a unique way where we don't have to go back into our savings. We don't have to pull money out of our investment account. So this type of plan that was implemented for this tax year, guys, is like, I'm killer for me. I'm like pumped up because you're able to pay down your student loans and then also get a match into your retirement account, guys. So let me go ahead and read it line by line. It says, according to Internal Revenue Code Section 401, non-discrimination test for matching contributions and employee contributions, elective for plan years beginning after December 31st, 2023, which is 2024, the new law allows employers to make matching contributions into a participant's retirement account when the employee makes a qualified student loan payment. Now tell me, guys, that's not fire. Like, yeah, I'm like so happy. So now I don't know what the reporting process will be. Do you guys have to print out your payments and then show your job? Every job may be different. So now, since you guys know, this is now time for you guys to head over to HR and let them, ask them, have they elected this new plan? Falasha, they told you, okay, for them to go ahead on and get that plan set up, okay? You say, you said you're confused. What you're confused about? So let me know if you're feeling like you got it. You got it? Okay. So let me know if you guys understand what I'm saying regarding this new elective program for the student loans and your retirement account. Let me know. Put one in the chat, guys, if you understand what I'm saying, just so I'm clear before I go to the next thing. Let me know. Put one in the chat. Okay. Okay, good. We get some ones on Instagram. Okay. 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 Perfect. 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 Okay. So the last, did you guys know? Look, I got to look at my little notes now. Okay. So, over the times, especially after COVID, a lot of people had to go into their retirement accounts to pull out money to sustain, right? To pay bills, for food. Some people, I remember when I was growing up, my mom had to pull out money from her retirement account just for us to eat. Like, I don't know if you guys have ever been in like situations like me where it was like where you couldn't even afford to survive at that point. So I know my mom had put money out so we could eat and pay our bills and things like that. It was more so for personal reasons. A lot of you don't know this, but the IRS have a few exceptions, right? I'm not going to go over all the exceptions that the IRS have where you're able to avoid an early withdrawal penalty for taking money out of your 401k and things like that, right? However, but the issue was the IRS never had an exception just for a personal emergency, right? Now, in this 2024 year, the IRS is allowing you guys to withdraw $1,000 per year, and it will not be subject to the early withdrawal 10% penalty. I'm going to say this again. If you guys contribute to your retirement account and decide to take money out, that money is subject to multiple taxes. It is subject to an early withdrawal penalty of 10% and also federal taxes. In this particular case, if you were to take the money out, you won't be subject to the early withdrawal penalty of 10%. So that means you get to withdraw that money and you don't get penalized for taking out your money. And yes, the amount is small because right now they only approved, I think it's $1,000. Give me 1 second. Yes, $1,000. Hold on. It says not more than one distribution per calendar year may be treated as emergency personal expense distribution. The distribution is limited to the lesser of $1,000 or an amount equal to the excess of forfeiture. Well, let's just shoot for the 1,000, but depending on the amount within your plan determines the lesser of. So it could be $1,000 or maybe it's always the lesser of. So whatever your amount is into your retirement account, you get to take up to $1,000 without the early withdrawal penalty. And so that's good because a lot of people, be wanting to take money out from their retirement account and know that they're going to get the penalty, so they don't do it. Now, I personally don't recommend you guys take withdrawals from your retirement account, but sometimes we have to do what we have to do. Okay. And so in cases like this, up to $1,000, you're able to take out tax without the early withdrawal penalty for taxes. So I thought that was pretty cool too. So do you guys understand that as well? Let me know. Put 1 in the chat if you understand the early withdrawal penalty for taking out money from your retirement account. Okay. Alrighty, guys. So do you guys have any questions at all about what we talked about, the new tax rates, the 2024 updates, the 2 did you knows that just actually came into effect this particular tax year for 2024? Do you guys have any questions about that as well? Oh, and then the same thing, let's say if you're subject to domestic violence, you get to pull out the money as well. I didn't want to give you all of them in today's video, but I'm going to add that one in. If you've been in domestic violence situation, you're able to take up to $10,000. They have quite a bit. For firefighters, it's quite a bit, guys. So I will do a separate, maybe short video for all the different individuals and the different amounts that you guys can withdraw, because each individual is different. Domestic violence victims, 10,000. Individuals with no affiliations, 1,000. Firefighters, I have to tell you guys that amount as well. Okay. Do you guys have any questions at all? Okay. So now what I'm going to discuss with you guys before I head off, okay. So somebody said, do you have the exact name that we can bring to our employer to ask about the contributions? So they didn't have a specified plan. So just tell them you want to see whether or not they have the matching component with your student loan payments. Okay. All right. So Instagram, I'm getting some ones over there. And sorry for the delay, guys. It's I have to keep you guys' comments on Instagram do not come on the feed yet. So hopefully with time, they will allow me to see it at the same time as the other platforms. Yes, the live stream, I think, is being saved. You're welcome. And then last but not least, guys, there are quite a bit of business credits. So they did extend the bonus depreciation and also the Section 179 bonus depreciation and things like that. But I'm going to go into that on another live stream. I'm trying not to be too technical all, at one time. But do you guys have any questions at all before I get out of here? And just so you know, I'm going to throw in one more thing. The IRS also clarified that even if you are a foreign entity, you still have to report with the benefit. You still have to do the beneficial ownership form, the BOI form. Because a lot of people was telling you guys, I saw online, telling you guys to go ahead on and try to get your company registered in another country. The IRS said, oh no, you'll be considered a foreign entity. It says a foreign reporting company. A foreign reporting company is a corporation, LLC, or other entity formed under the law of a foreign country that is registered to do business in any state or tribal jurisdiction by filing a document. So the moment that you registered in that other country and then you want to start doing business in the States, you still have to register with the BOI. So really, guys, like I said, there's no shortcut around this. Just file it and just make sure you guys are just doing your stuff right. And me and my firm are helping you guys complete the forms as well. You're welcome. Okay, guys. So to you guys, last call. Do you have any questions at all? Any questions about tax strategies? Any questions about the mileage? We talked about paying your child up to $14,600. But remember, guys, you can't just pay them $14,600. You actually need to pay them the hours that they worked in their business. Okay. We talked about the mileage rate. You guys get 67 cents per mile, which means for every mile you get, you almost get $1. Really, Black people's round up, right? Okay. I think that's it for my notes that I have for to talk to you guys for today, okay? Let me see. Yep, that's it. All right, guys, so I'm going to head out. I had fun. I'm glad I was able to test out this simulcast between Instagram, Facebook, and YouTube and all of the platforms. If you guys have any questions, please post your questions under the video. I will try to answer them. My team will break out this video sometime. You should get in maybe a couple of days. You'll see the breakout of it. But in the meantime, between time, guys, if you want me to file your taxes, please follow the link in my link tree as well. If you guys want me to do your taxes, if you're looking for like any of my classes and my books, check out my link tree as well. Especially my new book, Audit Proof, where I know you guys are being audited or you are afraid of being audited. You want to check out my book, Audit Proof, because I teach you guys how to make sure your tax write-offs are tip-top in shape, what you need to keep, what paperwork, what documents you need to track. And then I give you all of my little secrets and resources and things like that in the book as well. So if you guys head over to my link tree, check out my book, Audit Proof. You won't be disappointed. You'll probably be like, oh my gosh, I missed out on this deduction. Oh my gosh, Folasade, I missed this. So that's why I got audited, because I didn't have all of this in place. So that's why I missed out on claiming this. You guys will be able to connect the dots between everything. Your tax return, what deductions you missed, and so forth, guys. So I enjoyed today's live stream. You guys, it seemed like when I do like technical ones, y'all don't be popping off and really, engaging. But yeah, guys, I like engagement. If you guys are new to me, I like engagement. I like questions. I can answer all of the questions on the whim. I really don't have to do no research too much. Let me say, glad to hear you talk about the BOI form as well. Some people are spreading rumors that it's a scam, and that scares me. No, what's happening is not that it's a scam. It's just that recently they were sued. So the government was sued by a private party, basically saying that you're breaching our privacy rights, and we shouldn't be forced to complete this form. And so I'm not sure if that lawsuit will carry any weight, simply because they jammed it into so many laws recently. And actually, it seemed like both parties have agreed that they need this information. So no, it's not a scam. What is a scam is people telling you guys to put everything in trust, not knowing that trusts are supposed to be handled in a certain manner. And then also, depending on your state, you still may have to report that trust to them as well. If you guys did not see my initial live stream that I did prior to everyone came out with their scare tactics, I gave you guys the full rundown. I told you all the 14 states that require you to register your trust, and those states, if you have a trust, you will now have to also report that trust. So hopefully that state is not one of them states that the scammers then told y'all to go register y'all trust in. Because at that point, then you will have to definitely report it, because basically the law states that if you have to register your businesses with the Secretary of State, then that triggers the requirement to report to them. Okay. So yeah, so it's not, the form itself is not a scam. They're just trying to see if they're going to allow it to fly, because they're saying it breaches security rights and things like that. Some people are spreading room. Okay, so I read that question. So that was a good question, guys. Any other questions? See, I like questions now, y'all. I like questions, y'all. Okay. All right, guys. So it looks like you guys don't have any questions. Just for all of our newcomers, you can ask all of your questions. Now, if it's a question that requires a consult, that's more private, I will say that. If it's a question that I think we need to debunk, like especially online, with all of these people, saying so much nonsense nowadays, I will be gladly able to answer those questions. If it was like a tax deduction that you question or strategy that you were concerned about, I will also answer those questions. So when you guys see me live, take advantage of my time to really get clarity about things that's going on. Okay. The only thing I don't like about the Instagram, it look like I'm far away when I like to be close. Whereas with the StreamYard up here, I'm seeming like I'm close. It's weird. But okay, guys, I enjoyed today's live stream. Thank you so much for tuning in. If you guys have any topic discussions that you want me to talk about, I thought my team, we do have like a website where you can maybe submit your questions and things. So I will follow with them to see if they have that still set up for you guys to submit like your questions or live stream ideas that you guys want me to talk about. But in the meantime, if it's anything you guys want me to talk about, DM me or message me on Facebook. And once again, if you guys want me to do your taxes, head into my link tree so you guys can get on my calendar, so I can file your taxes this upcoming year, guys. I love you guys so much. Hopefully you track your expenses. Right, it do look far, but it's like close. I can even touch the screen. I don't know what's going on. I think that's the only thing I don't like. Instagram is it's far. But we did that, y'all. At least I can live stream. Y'all can see my screen and everything. So that's what I like most. You guys can see my screen. Okay. So I love you guys. I will see you guys on the next live stream. I will be live tomorrow at 7 p.m. I'm going to be talking about how you can use AI in your business. And like I said, if you guys want me to talk about anything, send me over the topics, guys. I love you guys so much. And I wish you the absolute best. And I will see you on my next live stream. See you later, guys.